is one video, this is one live really didn't want to do. And let's see what everyone thinks about this. But essentially, it's a bit of a conundrum, right? Because at the end of the day, there's no good answers here. What do I mean by that? Well, essentially, what we are talking about the fact that we have an iceberg coming our way. And you may not like what's coming your way, especially if you're about to retire, potentially in 2033. Now, of course, so many years away. Who cares? Well, I want my subscribers to know, to care, and to understand. There's a social security crisis and it's coming. The system's trust fund is expected to run out of money by 2033. There's not going to be enough money. We're not going to have enough money to retire. What does that really mean? What it means essentially that there is not enough funding to pay the Social Security of retirees starting in 2033. Well, that's a problem. That's right. And plans are being put forward to help out in this situation. And a good plan is plans are being put together to help fund Social Security for it to become solvent. There's a bipartisan reform that is put together, and I want to explain that to you. And I want to explain that to you because you need to realize that there's an iceberg coming, a huge one. And that iceberg, my friends, is on its way. And it's on its way right now. And there is no stopping it. There's no stopping that iceberg. Why? Well, because essentially there is not enough money to fund Social Security. And you need to understand one thing, is that funding usually comes from the payroll tax. Now, lots of people may think, they're going to say, well, that's not a big deal. Let's work on the budget. No, you need to understand one thing. The budget, fixing the budget is not going to fix anything at all at this point, unless the laws are changed. So it's not a debt crisis that we're talking about. There's just not enough money to fund by 2033, the Social Security. And listen to me, this is important for some of you. There's not enough money to fund the Social Security. And you need to understand how that works, and I will explain it to you. And then we'll talk about it because this is one topic. I mean, Russia and Ukraine and China, well, okay, these are several years from now, but this thing is coming. And there is not enough money. The Social Security benefits are not guaranteed. And no one wants to talk about it. And no one wants to hear about it. No one wants to deal with it because, what do you mean I'm not going to have enough money? I don't want to hear that. Just borrow more money. Cut the debt. Do something. That's the thing. And you could see them coming very slowly. They're coming in and they're talking about it, but they're talking about it in ways. And again, like I told you to my subscribers, understand the second level. What they're telling you, what they're not telling you is, well, we need to do something because it's not nothing to do with the budget, right? It has to do for the fact there's not enough money being generated to pay for all these people for the simple reason is people are getting older and less people are working. And on top of that, what they did historically is we're having this problem now. Well, you have to understand that the money, whenever you work and you contribute that money through your job, right, they take about 6 to 7%. That money goes into a fund. That money goes into a fund as invested. The thing is, they don't invest in NVIDIA. They invest in very safe investments. Like basically we're talking risk-free rate, 2%, 3%. So, and what does this mean? It means essentially there's not going to be enough money the way it is generated right now because too many people are retiring. So the current projection for as of mid-2025, these are real numbers. The Old Age and Survivor Insurance Trust Fund is now expected to become insolvent in 2033. Meaning it will no longer have reserves to cover full benefits. That's not possible. Hey, it is possible. It is happening. The same way I keep telling you that the U.S. is kind of losing ground a little bit and needs to do something. We need to do something about this as well. At the very least, you yourself are not going to be able to do anything. We know we can't do anything, but we need to be aware so that when it happens, we are prepared. Because at this point, it is projected to pay only about 77% of scheduled benefit amounts. If Congress accesses funds from the Disability Insurance Trust Fund to cover shortfalls, okay, so then it will last until 2034. But after that, benefits would need to be reduced by 81% of scheduled payments. So legally, the benefits won't cease. It's not like you don't have Social Security, but unless Congress acts, retirees would see 20 to 25% cuts. You will see potential cuts to 20, 25%. I mean, I don't want to do this live, frankly, because this is kind of depressing. But then again, this channel is about looking for a black swan. We're looking for things that potentially are going to impact us in the future. And at least if walking around during the day in our daily lives, we should understand what's happening. We need to realize what's going on, because one thing, we don't want to be oblivious to the world around us. You need to understand these things, right? So what comes next? What can Congress do? Well, it can avert or mitigate the shortfall, such as raising payroll taxes, reduce cost of living, raising the retirement age, adjusting taxable income, and establishing an alternative funding mechanism. We need another way of finding the funds to basically fund Social Security. Now, why is this happening? It's happening because there's not enough money to support. You have to understand that, and that's something that I did not realize quite myself before I started researching this topic for your benefit. The money that is taken from the payroll tax, it's not like they're taking the money and saving it for you, and the money is put like in a 401k. No. It's not like that. That money, believe it or not, goes to pay current retirees. So what's happening is there's more and more retirees. And obviously, it is going to be a problem. The U.S. is an aging society. The number of beneficiaries is rising much faster than the number of workers paying into the system. This has nothing to do with the budget, by the way. I just wanted you to know, because that was also something, the misunderstanding that I had, is that, the benefits, it's a pay-as-you-go system. Pay as you go. What does that mean? What it means that basically your payroll tax, 6%, 6.2% you pay, 6.2% your employer pays, don't get invested for your retirement. No. Instead, they are immediately used to pay current retirees. So any surplus is credited to Social Security fund, but overall it goes to pay for the people that are retiring. So the people working right now, and you should be aware of you, because there's people say, well, I don't care, I'm not going to retire anytime soon. Who don't care? Well, hold on, because what you're doing, you're basically paying for the people that are retired. Because Social Security and the trust fund itself, hold only non-marketable treasury bonds, which are backed by the U.S. government, which is safe. They're considered risk-free in terms of default, but the internal rate of return is very low. We're talking 2 to 3%. Because the reason they're doing it is because they want the money to pay for the retirees. Now, of course, you're starting to hear, and this is the little music that you hear in the background, right? The music is, you hear Trump talking about, well, maybe we should invest in crypto. Maybe your 401k should go into crypto. Congress is saying, okay, we need another way to fund this thing, and maybe we can't just do it with 2 and 3%. It's not enough. There is not enough. That's not going to work, okay? Basically, these funds that are invested at 1.1 to 2%. I mean, the average right now is 2 to 3%. What the heck are you going to do with that? That's not enough. So what does it mean? Well, the implication is that if Social Security has been invested in equity or in diversify, the imply could have been significantly higher, and that's what they're looking at. But also with the risk. Be careful. The more you hear about touching Social Security and making it a more risky investment to increase a return. So what's the solution? And again, forget the budget, because the money for Social Security by law, right? Cutting costs is not going to help Social Security. The money by law that funds Social Security is entirely through payroll taxes. So general funding cuts like defense, they say, well, stop spending money on defense. No, you can't do that. Even if you cut defense, agriculture, education, it doesn't automatically free up money for Social Security under Congress, unless Congress passes a legislation to transfer those savings into the trust fund. Such as you could have targeted transfer. Congress could cut other program and appropriate the savings to Social Security. Imagine what a mess that's going to be. And it directly extends the solvency. So basically, stop spending money on defense, pass a law, because you need to pass a law, and take that money and give you Social Security retirees. You could budget cuts lower the federal deficit, reducing borrowing needs, making it easier to politically to raise payroll taxes. So now you have to raise the payroll taxes. Essentially, legally, the current law prohibits using general revenue for ongoing Social Security benefits, except for temporary measures in a crisis, right? So you can understand why nobody wants to talk about this, and nobody wants to vote it, and nobody wants to bring it up because this is a dead duck. The Social Security 70-year shortfall is around 22 to 25 trillion. And I know it's like, I don't know, I don't understand, I don't care. Well, you need to care, you need to understand, and you need to know. Because you need to realize what's going on. Even aggressive discretionary budget cuts rarely free up more than hundreds of billions, not trillions. For example, in 1983, there was a Social Security amendment. Budget measures and revenue changes were combined with benefit adjustment to rescue the program's solvency. There was a payroll tax holiday. The bottom line is this. The bottom line is this. Cutting other part of the budget can help if the savings are explicitly transferred to Social Security Trust Fund. But given the size, budget cuts alone can't be solved the problems. They would need to be paired with revenue increases, benefit adjustments. So this is the tough cookie. So what's going on right now? So what are they doing to help you, right? I mean, people in Congress, let's see what they're doing. Well, basically what they're doing, so you have, obviously it's a bipartisan. You've got a Republican, Bill Cassidy, and a Democrat, Tim Kaine. So they're both saying they're spearheading a bipartisan plan to establish a new investment fund, separate from the existing trust fund, which is only returning 2 to 3%, with an initial $1.5 trillion injection. So we're going to put $1.5 trillion, and then we're going to start creating a new fund. It would be invested in higher return assets like stocks, put the tariff money. You can't do that. You can't do that. By law, you can't do that. You have to pass a law. So imagine, and you need everyone to agree. So basically, we'll be invested in higher return assets. The plan aims to grow the fund over 75 years to not only preserve benefits now, but also repay the Treasury and supplement payroll tax revenue later on. Critics caution that this amount may be too small and may be too late to fully address a roughly $25 trillion. Here's the bottom line is this right now, and I'm going to make 5 more points, but basically, even if lawmakers acted tomorrow, restoring the Social Security long-term solvency would still require a 22% benefit cut for current and future beneficiaries. So what you need to know, this is where I come in. There's going to be a 20% cut, okay? Unless they change the law and they say that you're going to get that money. And we're going to cut the fence, cut the wall, take the tariffs and put it towards Social Security. A payroll tax increase of 16% or a combination of benefit cuts and hikes, right, is not going to, if we waited until the trust fund was depleted, we would have to cut benefits by 26%. So you need to do something now. You need to be aware. You need to be also aware that, I mean, I don't know, what do you hear all day long? All day long. When you listen to the news, what do you hear? Well, Trump is meeting with Putin. There's the tariffs. We hear about Ghislaine Maxwell. Not that they are not topics that you should be aware of, but no one's really talking about you and your money because, frankly, they realize, I don't know, this 22% benefit. So for you to restore Social Security long-term solvency, I'm talking about, the long-term solvency. So that means that we're going to have to cut 22% of the money you're going to receive, increase payroll taxes by 16%, up from the 12%, meaning 6% your employer, 6% you, so it's going to be like 8%, and a combination of benefit cuts and tax hikes. This is just to keep it going, to keep it the solvency later on. So that's a lot of damage. So you have this bipartisan, and they're basically saying, well, what we're going to do, we're going to raise payroll taxes, so that's definitely going to happen. So if you have a business right now, you need to understand that the likelihood for that to go up is getting higher and higher. Increase the retirement age, gradually raising it instead of, full benefit to 69 as opposed to where it is now. Mean testing and benefit trims for higher earners. How do we get there? And the question I always ask myself is, wait a second, but how much money did I put in and how much money do I take out? You're not going to like this, but you should know. You need to know. It may not be the most exciting topics, but you need to know what is going on. And before we do that, don't forget to subscribe, Send me $2 for coffee via super chat. But let me do a quick survey because I want to know, and then we go back to number 3. Let me ask you the following. Let's see if you agree, if you're even aware of this. And I want my subscribers to be aware of everything that's happening. So let's do a quick survey here and let's see if what you think. Do you think you will have enough money to retire in 23? And usually my subscribers should want to know about these things. I want to get a feel for what you think is going on. Okay? We're learning here. We're not being entertained. We're learning. We're trying to, so that when you get up in the morning, you walk around, you have an idea of this world that's really moving fast and furious, and you want to understand what's happening. So back to number 3, as a single average earner, right? Single, I'm not talking about high income. You basically put in in your lifetime, you're going to put about $367,000. And your lifetime benefit is going to be around $383,000. So you're going to put in 367 and they're going to give you 383. And the reason why they could kind of measure this way, more or less the same, and that actually is an implied rate of return about 2%, which is good. So, you get some money in there, is because the money was invested in a very safe. Now, it would be nice instead of 383, you're at 600. If you invested in NVIDIA, probably have 2 million, and then there will be no problem. But because they want to make sure that there's enough money, because don't forget, again, this money invested is not for you. It's not for you specifically. It's for the current retirees. So if the younger people are saying, I don't care. I'm putting my money aside. Who knows, No, that money, that 6%, because you have no choice, that 6% they're taking away from you and 6% they're taking from 6.2% from the employer, that money goes to pay the retiree, not for you. We just hope that later on there's going to be enough money for you based on the money that they invest. So, and of course, if you're a high earner where you max out, your contribution was $871,000, and basically they are going to give you $600,000. So the rich don't get that. They have a negative return actually. You put in 871 and you get 618. If you're a couple, maybe 700 as a couple, you kind of a very modest return, which is you put in $700,000, you're going to get $812,000. How are you going to get it? Well, by the time you get it and the time you die, that's how much they're going to pay you. And basically, you could see it's not fair, right? Because you contribute all your life, and how long are you going to get it? So what's happening? Some Americans are basically claiming Social Security early, fearful of its future. Be careful. Think about this, because waiting to start drawing benefits typically leads to a bigger monthly checks, but many don't want to wait right now, right? Americans are basically anxious, and they are claiming their benefits earlier than planned. That's also a consideration. Think about that. That's what I'm here for. Just think about that for a second. Basically, maybe you should take your money now, because later on you may have a cut. You may not get the full amount if you can. So you have to get, well, if I'm going to retire in 2 years, for example, let me get the money as soon as possible. I'm not saying that doing that today, but between now and 2033, that's kind of your target. Think about this for a second, because you may not have the money. You may have a benefit cut of 20%. Not zero, but you're going to get less. So maybe you want to get your money now, knowing that you're not going to get it later on, or you're going to get a cut of 22%. So what's the point of waiting? Because you're waiting for nothing. You could be waiting for nothing to get that increase. If you wait, I think it's 62, 65, 68, 70. No, I want to wait later so I can get more money. You may not get it. You may get 20% less. Right now, that's what's happening. This is a fact. It's going to be less unless they pass a law to fund Social Security with some other means. But right now, there's not enough money because there's too many. So pending Social Security claims for retirement survivor insurance total 500. So basically 580,000 people basically claim for retirement in March, up from 500. Obviously, there's a reason why more people, but there's a lot of people this fear-mongering has driven people to claim benefits earlier. So these 500,000 people, they know what's happening, and they're claiming earlier. Many effects of the Trump administration's sweeping change to federal agency aren't yet apparent, but Social Security, they're already changing household financial decisions. You should be aware of that. You should be aware of what's going on. Okay. When I get 50 votes, I'll see the answer. So it's leading people to make decisions based on fear. And again, fear is a big thing, right? FOMO, fear of missing out. The same way you have a fear of missing out in the stock market, like, or maybe I should invest in NVIDIA, or maybe I should get my money earlier. These cases where, Social Security retirees, they were intended to file for security in about 2 years, but then a couple decided to receive the benefit earlier. There's widespread claim that there's fraud in the Social Security agency, improper payment, right? Technically $1,633. They said, no, the money is missing. Yeah, take it easy, okay? Calls to the agency, and you're not the only one thinking about that. This is a real thing right now. Look into it. Calls to the agency since the beginning of October are up 19% compared to the same period a year earlier. Other people are wondering and are worried, and I'm sure many of you are about to retire, and many of you should be looking into that. A lot of Americans are very uneasy. And why do you think Trump, the U.S. administration and Congress say, okay, we got to do something. We have to do something. But what can you do? So what the bipartisan investment reform. So basically, we're going to put together a new investment fund that's going to be initially, they're going to put $1.5 trillion in there, but then to help keep solving so it doesn't become insolvent. Because at some point, you're going to need so much money, it's not going to be enough. And it's not because we have too much of a budget. No, it's not that. Too many people are retiring. Not enough people working. Don't forget, the amount of people looking for jobs have gone down a lot because a lot of people left the country, right? 2.5 million came in, U.S. born, and about 1.5 actually left because they were asked to leave. So literally only 1 million more people are working. So this is good for the administration by saying, look, unemployment is not going up a lot, 24%. But that million people that left could have been working, funding your retirement. But they're not. And not making as many babies as we used to make. So not enough people. So the traditional reform options like raising payroll taxes, increase retirement age, modifying the cost of living adjustments. Yeah, but that maybe you could have some structural and automatic stabilizer to help, but that's still not going to be enough. And your contribution, like I said, is not enough. So don't forget, Social Security is a pay-as-you-go system. That's all it is. And, your payroll tax basically are immediately used to pay the current retirees. The trust funds hold non-marketable security. The returns are modest because the Social Security is not a 401k, it's a transfer program. Money comes in, money comes out. Money comes in, money comes out. That's it. Lifetime earning benefit formula, that's it. You get it. And the system was not designed to maximize investment growth. And that's what they're trying to do now. They say, well, maybe it doesn't make sense. Maybe we could make it more like a 401k. In fact, Trump is proposing to make some changes to the 401k proposal. What do you think they're doing that? Right? So on August 7th, Trump signed an executive order. Because if I'm telling you this, you could bet that they're telling him, they say, listen, you got to do something. Basically, he signed an executive order that directs the U.S. Department of Labor to revise its guidance to allow 401k and other defined contribution plan to include alternative assets, private equity, real estate, crypto. Of course, everybody say, oh, sure. Basically, allow you in your 401k, because the Social Security is not going to be enough, to basically allow for more higher yielding investments. Is that going to be enough, though? Financial firms, obviously, thank you very much, Mr. President. They have welcomed it. Say, sure, there's going to be more money coming our way, yeah. And they are starting to prepare hybrid target fund dates. Now, don't forget, now we're talking higher risk, higher reward, but higher risk. The potential benefits, you have diversification into higher potential return. So you have access to private equity, which tends to be 20-30% returns, real estate, crypto, think Bitcoin, right? And so what are the risks? Because always worrying about risk, because this is what this channel is about. You need to increase volatilities and fees. You need to think about liquidity constraint, investor comprehension. I'm investing in, what is crypto? Do any of you know what a Bitcoin is? What does private equity do? Well, private equity, and make a lot of money. Why? Well, basically what they do, think for example, of the money that they made, and these people are looking for 30-40% return, right? They basically fund leverage buyout of companies. Like, let's think about AutoZone, right? Remember AutoZone at one point with a bunch of small little businesses all over the place. And an LBO firm came in and said, you know what, I'm going to combine all this, take the company private, combine all these things, then I'm going to issue stock after the company gets better. Their return was like 1,000%. Make more money. Well, yeah, but it's risky because not only you got to make sure the business turns over, that you're able to issue stocks and you're able to buy it, not at a good price. There's a lot of issue that goes into actually doing these things, and that's a problem. That is not an easy thing to do. But the point is, that's why they're talking about risk. Potential excessive risk exposure. Not all investors may be suited for such complex, potentially speculative investments. So now here you are. Okay, where's my money? Well, actually, you're down because crypto is gone. Because at the end of the day, what is crypto? What is Bitcoin? Right? What is Bitcoin? Well, Bitcoin is basically an artificially designed mathematical formula that allows you to, I mean, don't forget, there's only a finite amount of crypto, like about 16 million, I believe, and that's all there is, and that's what they do. And then they take the 16 million, and basically people are, you don't own anything, you just own a mean of transfer, which is great because, frankly, it's worth almost 100, what is crypto worth today? Crypto is worth a lot of money, and more than $100,000. Why not? I want it. Of course you want it. But for your 401k, right? When you're ready to retire, you have no money, and then you go to Social Security, and, well, actually, you're not going to retire this year. You got to wait another year. And by the way, you're getting 20% cut because that's happening right now. So this is a separate initiative from Social Security reform. While previous question focused on contribution benefit, the 401k proposal concerns private sector retirement savings, not Social Security. So they're trying to do something, but they're not able to arrive. I believe at the end of the day, the only way to fund Social Security, you're going to have to take it from somewhere else. Let me see what you're saying. What are we talking about here? What we're saying is basically 54% say no. 54% of the people surveyed right now are saying there's not going to be enough money for Social Security, and that's a problem. So you know it. So what do? Well, for my subscribers, this is what I recommend. Obviously, be aware of this fact. Be aware that you're not going to get the money. Be aware that it is not an easy, and it's not an easy fix, right? It's not an easy fix. And the reason it's not an easy fix because there's not enough, there's too many people retiring and not enough people working. And that's what they're blaming the administration. Well, you let all these people go, so now we have less people working. Who is going to pay us? And some people misconstrued by saying, you know what we should be doing? We should just stop spending money and like somebody said, give the tariffs away. And this is where this channel becomes important because I want my subscribers to understand the world that they're living in. This is one of the risks. And it's a big risk. Now, let's cut the federal budget. Let's save some money. Now, by law, Social Security is funded almost entirely by payroll taxes. If you don't remember anything at all, remember this. That money that you get from Social Security comes from payroll taxes. That's what it's for. And unfortunately, that money is invested at 2%. So it's not growing beyond what it needs. So it's barely making it up. If you make a lot of money, you're losing money, basically. You're losing money because above a certain amount, high pay, you're not getting the money you're supposed to be getting because everybody gets the same amount, more or less. So general federal spending cuts don't automatically free up money for Social Security unless Congress passes legislation. So who's going to vote on a bill that says, okay, we're going to cut defense so we could pay the retirees, not the defense contractors? That's not going to happen. They don't want that. We're going to cut whatever, the wall, the defense, and that's what they say. You know what? The best thing to do is find a way for them to make more money. And therefore, let's create another fund and let's get into more riskier investments. And of course, the Wall Street loves this because now there's going to be a plethora of money coming in. And frankly, hey, don't knock it. DLJ is actually making rational economic progress that could help SSA. Please argue the pros and the cons. You see, that's the thing I want you to get. The money right now, today, that goes to pay for Social Security can only come from the payroll tax. So and I know, and unfortunately, people are so misinformed. And whenever you get into a topic, it becomes very confrontational about this is false or false. No. Understand one thing, that the money from Social Security comes almost entirely from payroll taxes. Now you could raise payroll taxes, which is currently 6.2%. Now payroll taxes as a business owner, right, you're paying 6%, and the employees pay 6%. So the 12% goes into the coffer, get into this huge amount of money that comes in, that pile of cash, and that pile of cash goes right out to pay the retirees. That's the only way it comes. So Trump could certainly the thing is you need more people. Well, you need to make more babies, bring more people into the country. But unfortunately, that's not what's happening, right? Because of the plan, I mean, you could argue both ways, but you have to realize whenever you do something, somebody loses out. And that's a problem, right? Scenario where the budget cuts could help. You could have targeted transfer. Congress could cut other program. They're not going to have a choice at the end of the day, right? You cut the other programs and appropriate the savings to Social Security. You could do a deficit reduction. Budget cuts lower federal deficit, right? Reducing borrowing needs, making it easier politically to raise payroll taxes. So it's kind of indirect. It's an indirect benefit. But then they have to vote for this. But these people don't want to talk about that. You probably don't want to hear about it either, because you figure there's nothing you can do. No, there is something that you can do, because at least if you're aware of it, you plan, like these people that are saying, you know what, I want to get my money now, because then I won't have it. I mean, not now. Remember, 2033 is when you run out of money. So maybe you won't get your money now. So at least you get something, because you may not get anything. And that is the problem. And that is the issue. Now, what this channel does, really, we look at all the issue surrounding your life and your job and your business. So what we're looking for, the economy. How is the economy doing right now? Okay, let us take a look at the poll. Let me look at this poll here. Let me look at this poll. How do we look? Do you think you have enough money? No, you don't. So what do? Well, 1, take your money early. 2, invest more with your 401k, but you're limited in terms of where you could put the money. And this is where the administration is saying, well, maybe we could let them invest in Bitcoins, but that involves risk. Okay, well, then Congress wants to come up with a new fund. But don't forget, that fund is not to give you your money. It's just to make sure it is not becoming insolvent over the next 75 years. It's not going to be enough money. The only thing that it can do is that if Congress places a vote and moves literally the money over, but who's not going to want to get their money to pay you? Or unless you have more people coming into the system to pay in the system. Where are you going to get these people? You got to get them from overseas. You got to get them from somewhere else to beat them quickly. Otherwise, you got to do something else. I mean, it's not a proponent to do this or do that. I mean, you never know what's going to happen. You need to decide what is important. And right now, that's what's important. Now, this channel is about one thing and one thing only. We are looking for black swans, right? We are looking for this, right? What is a black swan? Well, a black swan is basically, this is a black swan. I mean, it's not black swan anymore because you kind of know, but a lot of people don't know or don't want to know. I don't want to hear things like that. I want to hear good things. I want to hear we're going to do this, we're going to do that, we're not going to do this, we're not going to do that. I want to hear that I can do something. I can act on something. I could make a difference. And this one you can't. And trust me, because you don't like it, they don't like it either. And they don't want to talk about it, and no one talks about it. You kind of hear it. Trump mentioned the 401k. Let's make it a little more riskier. Congress says, let's plan forward. But no one is talking about the real issue is there's not enough people. And the real issue is we need to actually cut certain area and bring in. Now, politically, current law prohibits general revenues, money coming in for ongoing Social Security benefit. There's going to be a political trade-off. Redirecting saving will require bipartisan agreement, which is often harder than passing the direct bill itself. Scale problem. The Social Security 75-year shortfall is $25 trillion in present value. Even aggressive budget cut rarely free up more than a few hundreds of billion. It's not enough. So my advice is, 1, be aware of it. Think about that date. Think about your financial planning in terms of when should I get that money? Because I may not get what I want. I may get only 22%, 23%. May not be enough. And in your 401k, maximize the 401k. If they decide to change the 401k and they make some changes, then take a look at it. Hey, size 360. So what is this channel about? What we do is we talk about all the items and that's why I want you to join the channel, because these are all the issues that could face the economy, yourself, your job, your situation. And you need to be aware. You can't walk around in a world that you don't really care about, right? You want to walk around in a world that you understand. So like, for example, how is the economy doing? The economy is doing good right now. So you probably have a job. Unemployment is low at 4%. Inflation is under control. All these things are just fine. Of course, some will tell you, no, that's not true. The stock market is doing great, but the economy is not doing great, because they will point to recently we had issues with the employment numbers were down. Doesn't tariff recovery help domestic spending that increase taxes available for SSA? Crunch the Grace Hopper. Thank you very much. Appreciate that. I will have coffee thinking about you. Doesn't tariff recovery help domestic spending? Yes, that money is going to come in as long as it doesn't transfer into your daily life. Meaning that the idea is the tariffs, to make sure we understand each other, the tariffs are not paid by, Switzerland is going to be paying, believe it or not, 39%. That's a killer right there. Switzerland is not paying 39%. It's the firm that's going to be importing like watches and things like that. They're going to be paying the 39%. But do they want to pay 39%? You know what? I can't import Swiss watches, it's too expensive. And that's why the Swiss people don't want it. But the question is, okay, so let's suppose not 39%. Let's make it's like Europe is 15%. You get some wine, right? You're going to get a wine of 15%. Who is paying that 15%? Well, essentially, it's going to be the wine importer. Then what is a wine importer going to do? Is he going to have you pay 15% more for the wine? If not, then it will help domestic spending and family side, because it will increase taxes available for SSA. No, it will not increase. No. Tariff recovery, like I said, the only way the money from the 401k, the money from payroll taxes is the only way for you to pay for Social Security. That's it. Now, of course, it could be very helpful, right? It could be very helpful if the tariffs are used for something else, but then they would have to follow a law. And what's happening right now, what Trump is thinking about, he's thinking about giving the tariffs, have some sort of a tariff refund, right? Where you get a $600 refund based on the tariffs, but that money cannot go towards Social Security. So hopefully you understand that. Of course, be careful, because that 15% that goes in through the system, who is going to pay for it? Right now, what's happening, most of the tariffs are being paid by the importers themselves, GM, and I'm going to do a video on that to explain to you exactly where the money is going. But basically, right now, it's more or less being held at the level of the importer or the wholesaler, not the retailer, not to you, basically. Why? Because they don't want to upset the cart. They figure maybe this was going to happen, maybe this was not going to happen, but at the end of the day, it's supposed to go through. But maybe because of Trump, they don't want to upset him and they don't want to make a big deal. And only if it's 15%, I mean, come on, it's a lot, but maybe they could sustain it. I mean, GM, for example, did not increase the price of the cars for that purpose, because they said, oh my God, if you start increase the price then and Ford doesn't do it, then GM is going to appear like it's charging more money than Ford. So they don't want that. Right? So they don't want to appear. So that's the reason why it's not being passed on. But if it gets passed on to the people, you're going to pay 15% more. Now, you may get $600 back from taxes because of, but at the end of the day, you're going to pay. Now, it doesn't mean you're going to pay automatically, because it's not happening. Maybe they will be able to absorb it. I don't know about Brazil, who's being charged 50%. So coffee is going to be more expensive, definitely. But who knows? But to answer your question, Crunch the Grace Hopper, doesn't tariff recovery help domestic spending and family side that increase taxes available for SSA, the Social Security Administration, your benefits by law can only, and when I found out that, I was surprised, because I thought like you, well, I don't know, let's make more money and there's more money to give people. No. Social Security aren't guaranteed, because the government invested your payroll tax in a risk-free asset, right? Your payroll tax don't get invested for your retirement. It gets paid to other people. That's one. And two, the money, the contribution, the money that's going in is only for social, is only from payroll taxes, right? You're basically going to contribute on average $267,000. You're going to get $383, and that's going to be paid by the people that are working. The trust funds, so basically the issue is this. is by law, Social Security is funded almost entirely by payroll taxes. So what are we saying? Well, increase the payroll taxes. Okay, so we're going to make it, they're thinking going from 6.2, maybe 8%, or have more people working. Well, make more babies, do something. But even if you have a kid today, everybody has 3 kids today, and you're retiring in 2033, those people are going to be what? 9 years old? It's not going to be enough. They're not going to be working at 9 years old. So what can we do? Well, increase the payroll tax more. Allow the people to invest in 401k in other places that are more riskier. That's what they're talking about. Congress is basically, well, maybe what we should do is we should get more money. We should create another fund, a riskier fund. It's a little bit worrying that all these people suddenly are going after all the financial firms. Now, you can understand why the U.S.'s strength is 80% of the U.S. GDP is for actual financial services. Of course, these people love it, right? And there's nothing wrong with it. It's just that you need to be aware that if they're going to take your 401k, they're going to allow you to put your 401k in Bitcoin and cryptocurrency. You better know what you're investing into. Isn't Bitcoin doing well? Yeah, I mean, right now it's doing well. And frankly, with inflation expectation, it could go up. But you need to be aware what you're investing into. Right now, they're allowing you just basically stocks and bonds and treasuries. So to answer Crunch's question, doesn't tax recovery help domestic spending that increases taxes available? No, it doesn't. They cannot use this money. Of course, Congress could change the law. Imagine the job. Current law prohibits using general revenues for ongoing Social Security benefits. You cannot take the revenues to pay for Social Security. But I work all my life and, but thank you very much. But we're moving on here. Redirecting saving will require bipartisan agreement. These people would have to agree. They cannot agree on anything. Scale problem. The Social Security has a 75-year shortfall to about 22 to 25 trillion. So what does it mean for you? Well, okay, you want to know, what do I do? Well, first, be aware of it. Second, think like these people. There was this case of this lady that basically decided to take the money earlier. In 2000, there were 35 million Americans eligible for Social Security, basically age 65 and older. This year, that number was going to go from 35 million to 64 million. This means that during the past quarter century, the elderly share of the eligible population has risen by more than 50%. That's the problem. While the number of elderly Americans have risen by 82%, the total population has only risen by 21%. There's not enough people. We need more people. And that's what the Democrats were saying. Guys, are you sure you want to throw these people out? They're working in the U.S. And believe it or not, it's a large amount of people that were asked to leave, quote unquote. Now, I mean, I'm not saying it's a bad thing. I'm not saying it's a good thing. I'm saying it's a good thing if they were illegals and you didn't want them in the country. Fine, but be aware this is what happened. Right? This trend will continue. By 2035, the Social Security Trustees Project, the number of eligible Americans 65 and older will rise by nearly 20%. This is a huge, and we're living longer. With people living longer, it's no surprise Social Security expenditure have risen from their 50-year average from 4.4 of gross domestic product to 5.2 to 6% by 2030. The more and more GDP is actually Social Security. At the same time, there's a declining fertility rate. And when Bessent was confirmed, the Treasury Secretary, he said, we do not have a revenue problem. We have a spending problem. Federal revenues now stands around the historical average. He's saying, we got to be careful. The reality of aging society has rendered the historical average of federal revenue obsolete as a guide for future policy. You got to do something else. You got to change something. And in addition to everything else that's happening, you need to change this as well. So Crunch, I am telling you, be careful, be aware, right? Be aware what's happening, understand. So what do you want to do? Well, what you should do is think about, well, if I'm about to retire, like there was a case of these people, let me see if I could find them, where she basically and her husband decided that it's a real thing. It's a real, Americans are claiming Social Security earlier. Let me give you this history. Like, for example, this 65-year-old originally intended to file for Social Security in about 2 years at 67. And her husband already received his benefit, currently decided to file for her this year because that woman opted to take a monthly check of $1,633. It's you who paying tariffs not other countries. Correct. Backland is totally fine. It's true. And this is the other thing that you have to be very beyond the entertainment. You need to be aware that they say, oh, India is going to pay 50%. No, India is not going to be 50%. And Brazil is not going to be 50%. The reason why they're upset, and it kind of makes sense, they're saying, well, if we're going to be charged 50% on the tariffs, nobody's going to buy coffee from Brazil. That's the reason why they don't want 50%, not because they are going to be paying the 50%. Please, I want my subscribers to be fully aware, understand what's happening. You are not, the country is not paying the tariffs. It's just at 50%, even the person bringing in the food or the coffee from Brazil is not going to want, because they're not going to be able to sell it unless they take the 50% hit, which they're not going to want. They're not going to want it. That is not something that they want. So Christine, basically, she opted to take the 1633, even though it was about $130 less that she would receive at full retirement age of 67. So she's losing about $1,500 a year, but they're already receiving benefits. They won't face any future reduction. They hope that if they're already receiving benefits. But I will tell you, be careful, because economists and financial advisors generally discourage claiming early. Benefits increase every month. Someone waits to take them beyond the minimum. The increase stops at age 70. So they may not, just because you're taking it early doesn't mean you're not going to get paid. You're going to be fine. So, for example, a person who postpones benefit until 70 instead of 62 will come out ahead if they live at least 80. Of course, it's kind of morbid, but it depends how long you're going to live. Because if you're not going to live long enough, that's going to be a shame and you're going to lose out. So crunch, what you have to look for is when you're going to retire, try to keep yourself healthy, right? Try not to be, because if you collect the money now and you get to live past 80, you're better off waiting than taking it now. But of course, you're saying, well, if I take it now and I get 20% less, or worse, you could be waiting until 68, and then you say, no, we're going to push it to 69 now, because we have no choice. And then you don't get your money. And then you are planning. And then you... So these are all the things that you have to be very careful. You need to be aware. You need to understand these things. And this is what this channel is. I mean, we're talking about a very mundane, well, not mundane, a very important topics, quite frankly. A lot more important than Ghislaine Maxwell, frankly. But, it's only really for the people that understand it, are concerned with it. I mean, I just want to bring it up. Let me see. What do you think allowing risky investment in your 401k? Let me see what the people are thinking. Let me do a quick poll to see if you'll be okay, because that's what they're doing right now. They want to allow... Okay, here's a question. Do you think that allowing risky investments to 401k is a good idea? Starting poll right now. It's not you that's paying correct. Let's see what happens. There's enough people here. Let me get 48 people to tell me exactly what the thought is. Right? Okay, let's see what happens. Now, other people citing the other causes for the increase in claims in March, including aging baby boomers and a new law that raises benefits. The point is, what you should know is that you need to actually be aware that this is happening. And the reason this is happening is because there's just not enough money going around. This is crazy. I mean, I was shocked, because one thing I thought, well, yeah, but I've invested for, I don't know how much money I put in this thing. Worked for like 30 years, 25 years. Yeah, but that's okay, because the money is put aside for you. Wrong. The money is not put aside for you. All I did all these years is I paid the people that were retiring. That's what I did. Okay, well, but at least the return on investment is great. Wrong. Because the money that I'm going to get is probably going to be less than the money I put in. You're probably better off investing it yourself. And that's what they're doing. They say, well, you know what? Why don't you put your money in a 401k? We're going to allow you to put the money somewhere else. That's a lot of damage. It's a lot of damage. Yeah, a lot of people, so far, people